Good morning and welcome to this Monday, July 3rd, 2023 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes as we take a look at what's going on in the market together and hopefully get prepared for another trading day. It's great to see everybody again this morning. Market continues to push higher. That's a good thing. We've seen some rotation. I'm going to talk about that a little bit in just a few minutes. I do want to mention, though, first, and let me make sure I get this up on the screen for you. We are having, I want to make sure that is good. I think we're good. We are having an event coming up this Thursday at 7 p.m. I think this is going to be a really big event. You should mark your calendar. Even if you cannot attend it, we'll make sure we get a recording out to you. It'll be time-stamped, so you can go back and take a look at the things that are important to you. But if you go to earningsbeats.com, which I have up on your screen right now, we have a link to register. You do want to make sure you get registered. Even if you can't make it and you want the recording, you want to make sure you get registered, because this is how we're going to send out the recording. If you're not registered, you won't get a copy of the recording unless you're already a member of Earnings Beats. But if you click on this registration link on the page, on our homepage, it'll take you to an area very simple. You'll see that green button, sign up. Make sure you sign up. In addition to the event that we're going to have on Thursday, which I'll talk about in just a second, we have a free copy of a money flow PDF that we'll send to you. And I'm telling you, this is something that I worked countless hours, thousands of hours on, starting back in the late 1990s. Just to give you a little bit of background history, I'm a former practicing CPA, and I noticed that when we would audit payroll, a lot of our company, or a lot of our clients would have payrolls that were around the first of the month and the middle of the month. And I had a passion for the stock market back then, but my career was public accounting. And I just remember thinking, I wonder what impact, most of our clients have these payrolls around the beginning of the month and middle of the month, and they withhold employee 401k money. And then as soon as the payroll's done, they essentially take that money that's been set aside and they send it off to Vanguard or Fidelity or whatever. And then that money gets invested. And I'm looking at this thinking, okay, this is just for a couple of our clients. This is going on all over the world. I mean, all this money that's going into Vanguard and Fidelity, and of course, payroll periods can end at any time, but there's definitely more that are going to end at the end of a month or at the very beginning of a month, and then also in the middle of the month than other times. And so I'm wondering what this glut of money pouring into the stock market is going to do. What effect does that have on the performance of the stock market? Because in the stock market, after doing the study, I realized not every trading day is created equal. And you've got to understand money flows and how it impacts stock market performance, especially if you're a trader. If you're an investor, you just buy, put your money in the market and you just let it sit, probably not too much of an impact for you. But if you're a trader, this information is gold. And I'm giving it away. Anybody who signs up for this Thursday event at 7 o'clock will get this free money flow PDF. And I'm telling you right now, it will change the way you trade the market. You still want to do the setups based on technical analysis. I get all that. But if you realize when the money tends to come into the market, when it tends to go out of the market, and you just keep that in the back of your mind, over time, I think that's really going to help your trading. So make sure you get set up for this or signed up for this. So it's going to be our bullseye forecast, our mid-year update. And I'm going to spend some time on Thursday evening talking about what's transpired. As you all know, if you've been following me for a long time, especially our members know, I've been bullish since June of last year. There are some that are still questioning whether or not this is a bull market advance. I don't even know how you can question it, but okay, that's just me. I've believed for a while that we were going to turn right back up. There was a ton of manipulation that took place in the stock market in 2022. I wrote about it real time. I talked about it real time. And I said, Wall Street was prepping for a big advance, and you could ignore it if you wanted. Maybe it wasn't going to matter, but I thought it mattered. And as it turns out, it's mattered. We've seen this massive run in these technology stocks in 2023. And throughout 2022, I kept saying, money is rotating into technology. Money is rotating into technology. Money is rotating into technology. You got to be prepared. Wall Street is preparing for it. And then all of a sudden, what happened to technology? It exploded to the upside. Wall Street was already in. And then they're parading their, they call them analysts, I call them influencers, on CNBC, telling everybody now, hey, coast is clear. You can jump in now. Well, they're already in, so makes perfect sense. And the problem, I'm a technical analysis person. I love technical analysis. I practice technical analysis. But the problem with most areas of technical analysis is it doesn't catch the bottoms and the tops. Most technical analysis is lagging. It's going to tell you what's already happened with price action. So you're not going to get a great looking PPO when prices are going down. You have to wait for prices to turn back up before the PPO is going to turn up. Same goes with RSI. You're not going to see an RSI 70 or 65 showing bullish conditions until after you've already turned up. So a lot of the technical analysis tools that I use are great trend following tools, but they're not great predictors other than maybe divergences. Divergences can work pretty well, but outside of divergences, I don't really see a lot of technical analysis tools that are going to help. When everything's going down, breadth is going to be bad. The number of stocks below moving average is going to be horrible. I mean, technical analysis is going to tell you what's already happened. And that's why a lot of technicians are just now starting to get bullish, because the market's turned up and now a lot of their indicators are turning bullish. Now the breadth's starting to pick up. Shocker. But I think some of the other beneath the surface signals that we do a lot of research on here at Earnings Beats, that's what can help us in terms of finding bottoms and tops. It starts to help reveal what Wall Street's really doing rather than what they're saying. I want to know what their money is doing. I don't care what they're saying. Their lips are moving, whatever. Let's get to the money. I want to know where their money is going, and that's what we focus on. Anyhow, this event, we'll be talking a little bit about what's happened and why we're where we're at, and then where are we going. And I think that's probably the part most of you are interested in at this point. But check it out. It's a free event. I mean, we do this to give back to the community. Hopefully we show you a little bit about what we do at Earnings Beats, and maybe that's appealing to you and you want to join us. That would be awesome. We'd love to have you as a member. But really, it's about giving back to the community. I write over at Stock Charts periodically through blogs that are free. I do the shows here at Earnings Beats, also over at Stock Charts, which are free. These are ways for us to give back. We do these events from time to time, which are free. And so I hope you take advantage of it and join us. All right. And also be sure to like our videos when we do these videos. We'd like to get out to more folks. And then subscribe. We're going to be doing more and more live streaming on YouTube. And the best way to keep track of us on our schedule is to become a subscriber, to make sure you know when we're doing these events. So please do those two things. And now let's get on with the market. All right. So what happened on Friday? Well, it was mostly bullish action. Dow Jones Industrial Average was up 285 points. That was up a little more than 0.8%. S&P 500 up another 54, up 1.25%. We closed at 4450. That was the highest close that we've seen since April 20th of 2022. So we're now looking at, what's that, 14 months, going on 15 months since we've seen the S&P 500 close at this level. By the end of the year, well, let me save that for Thursday night. NASDAQ 100 up 239 points. That's 1.6% higher. Threatening to get to that high that we saw just a couple of weeks ago. Mid caps up about 2/3%. Small caps gave back. It was up earlier, tried to make this breakout and couldn't quite get there on the small cap or the S&P 600 small cap index. So it did fail at resistance, kind of pulled back a little bit later in the day. It was only up 0.1%. And it has lagged quite a bit in 2023, although I'll show you some numbers in just a minute, but small caps did excellent in the month of June, actually leading both the S&P 500 and the NASDAQ. Transports remain on fire. Airlines are flying, no pun intended there, but that group is absolutely moving to the upside. Truckers have been doing better. Railroads lagging a little bit, but starting to show signs of moving higher. The transports, and I've shown you charts, and there'll certainly be one on Thursday that I'll talk about. But when transports are moving to the upside, do not bet against the S&P 500. The S&P 500, the stock market, has been called the best economic indicator out there, because as the economy picks up, these large multinational companies start to grow their earnings. And when they grow their earnings, the market looks ahead. The markets, the S&P 500, many of our major indices start to rise before you start to hear all the good news. And so when transports are going up, transports only go up for one reason. They're shipping more goods. They're taking more, flying more customers around. The economy has to be picking up when transports start to roll. And so when you see transports moving up, that's why the Dow theory considers transportation stocks. It's really an important part of the market. Transports don't generally lead. I'm not going to sit here and tell you that the market's going to go up 20% and transports are going to go up 40%. That's not usually the way the market works. You just want to see transports going higher. They don't have to be the leader. You just want them going up. And so that's what we've been seeing. Look at June. This has been a massive move to the upside in transportation stocks. So now we're starting to get the transports going. Maybe part of that is the market anticipating the Fed halting interest rate hikes and eventually beginning to lower, strengthening our economy down the road. I don't know why, but I don't like to ask why questions. And when you use technical analysis, you're taught not to ask why questions. You follow the charts. This is what's happening. Don't ask why it's happening. It's happening. Transports are going up. That normally is very bullish for the market. Technology. So you got technology up 1.6% on Friday. Wasn't a great week for technology last week, but they did start to gain strength again late in the week. Discretionary stocks up 1.25%. Utilities 1.1%. Those three groups were your three sector leaders. Utilities kind of weird addition, or a weird, I don't know what the right word is, inclusion in that group of three. Because if you look at that chart, you'll see that the utilities have been under some pressure really throughout much of 2023, but they're not breaking down. The absolute chart, the absolute support level continues to hold. We're just sideways consolidating. Why? Because money's rotating into the key areas that forecast growth. There's only so much money out there. And as more and more money moves toward growth, there's less available to go toward the defensive areas. So that's why you see aggressive growth stocks tend to lead the market to the upside, while many of the defensive, value-oriented areas of the market, like utilities, tend to lag. And so that's what we normally see. But in a bull market, you will see periods of time when many of these defensive groups will also get a boost to the upside, and that was the case on Friday with utilities. Looking at industry groups, I'm starting to get some good feelings and some good vibes from the renewable energy space. They've been downtrending for a while, and this index really follows mostly First Solar. You can look at some other areas in renewable energy, other ETFs like TAN, to get a better feel for what's taking place in the renewable energy space. But I do like renewable energy, and renewable energy loves the month of July historically. We did just send out our seasonality report for July to all of our members. If you're not a member, that's just one more reason why you should be a member. We have a 30-day free trial, so make sure you check it out. But in that report, we give the 20 best stocks to consider for July based on their historical tendencies. We give you the best areas of the market to focus on. Two areas that have not been performing very well, but do like the month of July: renewable energy and biotechnology. Those are going to be two areas to watch, because if they start to move and start to make breaks to the upside technically, just keep in mind that they've got some historical tailwinds that could carry them to the upside. So renewable energy had a good day on Friday. I'm watching this group. If we can get back through the moving averages, break this downtrend line, I think this is a group that could have a good month ahead. Recreational services, I don't know what else to say about this group. They have been on fire. And if you remember, it was a long, long time where stocks like the cruise lines, anything that was stay at home, really just could not get going, including the airlines. We're kind of seeing airlines and cruise lines melt up together after years of underperforming. So, you look at recreational services and you look at cruise lines, you say, well, they can't go up anymore. They've gone up so much. Well, I would suggest you go back and look at the chart from about the last 3 years, because they went down a lot. And when stocks go down a lot, they have a tendency to go back up a lot. So I think this is a group that still remains on a hot list to trade. Any kind of pullback in these stocks, I think, is a great opportunity to get in. Medical supplies, I just wanted to point this one out because recently, and I think it was in our EB Digest, again, another free newsletter that we provide to the community, I pointed out these equal highs coming across here in 2023 and the rising low. And I pointed out just as we were making the breakout above that 1430, 1440 area, suggesting that this one could go a lot higher. We're in a melt up right now in medical supplies. So this is why we follow technical analysis. We follow the patterns, because that gives us another clue on areas of the market that can outperform. And that's what we're getting from the medical supplies group. All right, 10-year Treasury yield. I do want to mention first, if I can find it, we got a couple of economic reports due out today. One is the June ISM Manufacturing Index. May was 46.9. June is expected to jump a little bit, 47.3. So that's an expected positive that we're hoping to see later this morning. May construction spending rose 1.2% in April. That's expected to drop a little bit back to about 0.5% in May. Keep in mind, many of these home construction reports are lagging. Many of them go back 2 or 3 months. I mean, here we are, we're in July, and we're talking about what's going on from April to May. The market looks ahead, and we're getting reports that are in the rearview mirror. So I don't pay a lot of attention to those kinds of reports. I'd prefer to see the economic reports that are a little bit more up to date. But nonetheless, it's a report coming out. Want to mention it. All right, moving on to talking technically, I like to talk about the major indices and where they currently stand. So we've got the S&P 500. There is your breakout and a new high for 2023, new high close, 44.50.38. Last time we closed at this level or above was back, as I mentioned earlier, on April 20th, 2022. So we continue to push higher. Got bears out there continuing to say, no, we're going to roll back over. And the market's saying, well, I don't think so. We're going to keep going higher. I'm sticking with the market. I'm sticking with what the technicals are telling me, and that is that we're going higher. NASDAQ 100, 15,179 is where we closed. That might be a high close, but it's not a high intraday or candle body. Let's see. The high back on June 15th was 15,246. The close was 15,185. Okay, and we closed at 15,179. We got 6 more points to get a new high close, but I like to follow candle bodies, which includes opens. And so the NASDAQ 100 opened on June 16th at 15,272.65. That's the level that I'm watching before we get another breakout. And I think another breakout's coming. If you're betting against the market right now, let me just tell you, historically, the first few weeks of a new calendar quarter, we tend to see pre-earnings advances to the upside each quarter. So I'm talking about the first few weeks of January, first few weeks of April, first few weeks of July, and first few weeks of October. That historically, now don't say I'm telling you a guarantee. I'm not giving any guarantees. I've just done research. We're passing along our research. First 3 weeks of a calendar quarter tend to perform, the S&P, the NASDAQ, and the Russell 2000, especially the NASDAQ and the S&P, tend to perform much better than normal as you head toward the start of earnings season. JP Morgan will kick off earnings season next Friday, July 14th. So these next couple of weeks, historically, we perform really well. And I'll leave it at that for now. All right, IWM, moving on to the Russell 2000. And this, of course, is the ETF that tracks the Russell 2000. It's the ETF that I like to follow because recently I've been talking about trading the TNA. I've gotten out of about half of my TNA at this point. That's mostly for members because I've been talking to members about trading it. And you can see we had another big move in the IWM to the upside. So what does that mean? It means TNA had a really nice move to the upside as well. We were down below 32, got back up close to 36, very close to the recent highs. And anytime I get close to resistance, I want to make sure I'm taking something off the table in terms of the leveraged ETFs. And the reason I do that is because when you get an underlying index, and I always trade off the underlying index, by the way. I don't look at the technicals on the TNA. I look at the technicals on the IWM. And so when the IWM tells me it's time to sell, then I sell. If you notice, the IWM went right up here on a candle body basis and was right at the high candle body from earlier in June. If you look at the TNA, it was slightly lower than what we saw earlier in June. So if you were trying to set a sell on the TNA and you set it up here at say 36 and a quarter, or 36, 20, 26, 36, 30, whatever, you would have never triggered. But if you're following the underlying index, which is the IWM again, it did trigger. And so, and honestly, when I'm looking at the leveraged ETF, I'm not trying to squeeze every penny. I get a big move, I'm going to take something off the table. And the only reason I haven't taken it all off the table is I think we're going higher. I think the TNA is going to break out. I think the IWM is going to break out, which will lead the TNA to a breakout. And you might say, well, why don't you hold it all? Well, and by the way, when I sell, I move into the IWM. I'm still investing in small caps. I'm just taking some of the leverage off the table, just taking a little bit of the risk off the table as I hit resistance. We get a pullback, that money will be back on the table. I'll move it back from the IWM into the TNA. But I respect resistance. As a technician, we struggled here last time. There's no guarantee we're going to get through it. I mean, if you look at the IWM going back since August of last year, we've done nothing but go sideways. You know, NASDAQ's in an uptrend, S&P's in an uptrend, small caps not in an uptrend. I mean, short term, I think we could be, but you know, medium term, intermediate term, not really. It's important to follow these key areas of support and resistance. So that's where I am right now on the IWM. All right, looking at the sectors. So this is a 1 week look at the sectors from last week. And honestly, it was a little bit of a reprieve. I actually liked it. Look in the top three. No aggressive groups. That's great. Now, I wouldn't want to see that continue for the next 4 weeks. I don't want to see all of a sudden all of the defensive groups moving to the top and leading us for a month. That wouldn't be a good sign. That would certainly be a check mark in the bear column, because you don't want to see leadership when the market's moving higher coming from defensive groups. When the market's moving lower, you almost always see relative strength in defensive groups. So I wouldn't worry about that. It's when the market's going up, you don't want defensive groups consistently leading that move, because what that's telling us is that Wall Street's rotating into defense. Why would they do that if the market's going to keep going higher? So it's a warning sign if it happens over a period of time. Last week, I have no problems in this because I like to see all sectors participating in a bull market. You want wide participation. And so some of these groups at the top that are leading, look at real estate, look at the scooter score, stock charts technical rank, 41, energy, 20, materials, 69. These are not the top groups right now in the market. So we're starting to see some of those groups moving higher. This is awesome. This is exactly what we want. We want participation. We want everything going higher. Last week, how many sectors are there? 11. Oh, I need another finger. 11. How many went higher? 11. All went up last week. So we're getting participation, wide participation. We're seeing some of the groups that were lagging come back, show a little bit of relative strength. Again, if this goes on for an extended period of time, we have to kind of pay attention to it. But for 1 week, I love it. Love it. And I'm going to talk about the energy group in just a minute. So let's go back over to earnings beats, because I'm going to show you the chart of the day. And if you just want to be part of the chart, actually, if you register for Thursday's event, we'll also have you signed up for the EB Digest newsletter, our 3 times a week newsletter, which just, is really educational in nature. You can trade off of it if you like. That's completely up to you. But I usually will provide one chart 3 days a week, Monday, Wednesdays, and Fridays. and just show you some of the things I find interesting about that chart. It may be technicals, it may be sentiment, it might be seasonality, it could be whatever. But if you go down here below, if you're not registered for the event and you're not already an Earnings Beats Digest subscriber, I would highly recommend that you come to this page, put in your name, email address, subscribe. No credit card required. You can unsubscribe at any time. We'd love to have you just to kind of follow what we do. My mission and my goal personally through Earnings Beats is trying to help as many people as I can understand the market the way I've come to understand it over the years. And trust me, I try to learn about the market every day. I don't think there will ever be a time that anybody can say, I fully understand the stock market, because the market's always evolving. Things are always changing. We now have a global environment that we never really had to worry about 20, 30, 40 years ago. Things have completely changed. And I'm sure 20, 30, 40 years from now, things are going to completely change again. Technology moves so fast. Innovation. Anyway, all these things, we need to learn all these things together. And this is one of the ways you can do it. Learn a little bit more about us at Earnings Beats. And by the way, if you subscribe, you don't like it, unsubscribe. It's very simple. No questions asked. You won't hurt my feelings. If this isn't for you, you might be somebody, long-term investor. You already know what you want, what stocks you're in, and maybe you don't find any value in what we provide. That's great. No harm done. No hard feelings. But I think a lot of you, especially those of you that like to trade, I think there are things that we do that certainly you can add to your own arsenal. All right. I'm going to move on 1 second. I'll show you the chart of the day I sent out this morning. All right. The chart I sent out this morning. Now, this is a material stock, and I haven't really focused much on materials, but you saw in that sector summary, I'll go back and show you, materials were third last week. We're starting to see a little bit of strength in materials. And if you go over and hover over the symbol, you can see that, it's getting pretty close to breaking out. Not quite there, but getting close. And so this is a group, when you're in a bull market, you can start looking at a lot of different areas. I favor technology, consumer discretionary, communication services. With the transports moving, I think you got a lot of opportunities in industrials, but really it's all over. The groups that I'm mostly staying away from are the defensive groups. If you're cautious and you think the market's not going higher, then that's where I'd probably focus. But I'm on the opposite end of that spectrum. I believe we are in, and I've said it for quite a while, but I think this is the renewal of the long-term secular bull market that we've enjoyed since 2013. I think we ended our cyclical bear market in June. Well, I said June, ended up going a little bit lower in October. And then we've rallied since then. And I believe this is the start of another very significant push to the upside. So anyway, with LTHM, this is Livent Corp. First thing you'll notice, the AD line. I like that. Now, I still need good price action. I don't like to buy or sell a stock just simply based on the AD line. It's a secondary indicator for me. Primary indicator is price and volume, and maybe just beneath that, relative strength. I need to see a stock that is trending higher. I need to see a stock that's got good volume trends, and a lot of times that comes out in the AD line, which is strong. I need to see a stock that is showing relative strength to its peers. And so here's LTHM, AD line strong. I'm watching. Look at this breakout. This would be a very, very strong breakout if we get through, I think it's 2764, but let me double check that. I think it's just open. Yeah, 2764 is the level. And we closed on Friday at 2743. So we've got less than 1%. And if I see the volume pick up and I get that breakout, that would be a bullish development on LTHM. And at that point, the rising 20-day, once I get a breakout and I think we're trending higher, and that's what a breakout tells me, is at that point, I need to be thinking we're going higher. And so when I get that breakout, when we're going higher, my key support is the 20-day moving average. So you could, it's up to each individual how you trade this. You could buy into half on a breakout, and if it keeps moving up, you could add another half later. You could buy half on a breakout, and if it's a false breakout and it comes back down, get the other half of the 20-day moving average. Or you just get into your whole position when you get a breakout and just use the 20-day as your stop. That's the way I approach breakouts when I think the market's trending higher. But we do know that materials are starting to move to the upside. This is a stock that has been showing relative strength for about the last 60 days versus the specialty chemical index peers. And so it's showing relative strength. It's on the verge of a breakout, and it's got a strong AD line. So those types of things do encourage me. Now, when you look down below at the bottom panel, you'll see that the specialty chemicals index is not a great area of the market at this point. So it would certainly help LNT or LTHM. It would help the stock if the group itself started to move a little bit and started to show some relative strength. So watch for that. But in the meantime, I'm looking for a breakout here to hopefully trigger something a little bit bigger in the stock. All right, moving on, and the market did just open. I'll try to get through this real quick. I just want to show you energy. This is the crude oil, a price or chart of the price of crude oil. And you can see that down around the mid 60s, that's been a great area of support. Each time we get down there, we tend to see a move back to the upside. So watch 65. If you see a close on crude oil below $65 a barrel, ignore this conversation, because if energy starts to break back down, I definitely am not going to be interested. But it is holding, and I do think the economy is going to strengthen. And if the economy strengthens, that's going to help the demand side of crude oil. You still have the supply issue, and that's the weird part about energy. It's, supply can change at any time. We could have OPEC come out and say, we're increasing production or we're cutting production. And that can have a huge impact on the crude oil, on the price of crude oil, and on energy stocks, in addition to what the demand side is saying. So you got to be careful with crude oil, but make sure we hold 65. And if we start moving back to the upside, I think you probably want to watch the XLE first, because we've got a trend line. If you connect the high from back in January and again in April, we are just beneath that trend line, and also just beneath a key area where we could be seeing a breakout around $82 a barrel, or $82 a share on the XLE. So watch that. We haven't been above $82 since back in early May, late April. And if we get that breakout, then it could lead to breakouts in other areas of energy. And I pulled up one chart here, and then we're going to wrap with this one, the U.S. Exploration and Production Index chart, because I'm seeing we're right up against the trend line. And I think we might actually be breaking out above that right now. I like that volume pickup on Friday in this group. And we're right, just like the XLE. We've got this 2-month window where we've been unable to breach or to get through a key area of resistance. And that is right up at about 935. And we closed at 930 on Friday. So can we get that breakout? Watch crude oil, watch the XLE, watch this group, because if we do make the breakout, if you like the leveraged ETFs, there are leveraged ETFs on energy. There are a lot of individual stocks that have not been performing well in energy that we could begin to see performing well. So this is an area that I'm starting just to kind of monitor a little bit. Again, I don't like it as much as technology and some of the other aggressive areas, but money will rotate from time to time. And as a trader, that's important to kind of follow. So watch, let's see if we get breakouts in this area. All right, that is it for me. I appreciate you tuning in. Always appreciate everybody on YouTube, all of our members especially. You guys keep us in business, so appreciate you. We have a number of people that we employ here at Earnings Beats, including both of my children. So we all do like to be paid. And of course, if you find that this is benefiting you and you're finding value in what we do at Earnings Beats, I hope that you certainly would at least give us a shot. We do have a 30-day free trial. And at that point, and we run a lot of specials to try and keep prices as low as we can. I think we're very, very competitive with all the other services out there. And if you can find one that's called the market better than we have, I would say absolutely go sign up with them right now, because I don't know anybody that's called tops and bottoms over the last few years, even going back to the start of the pandemic and before the pandemic. So love to have you join us, but at least keep in mind the event that's coming up. This is, again, another free event that we're doing this Thursday at 7 p.m. You're not going to want to miss it. So go to Earnings Beats, click on the registration link that'll bring you to this page, sign up, save your seat, and I hope to see you there on Thursday. And also click the like at the bottom of the video And also make sure you subscribe to our channel. Happy trading, everybody. Hopefully we're off to a good week, and happy July 4th tomorrow, by the way, too. Happy trading. See you on Wednesday. Take care.